through those. First chart here is Microsoft. Now we can see that this starts off okay. The price opens up and immediately drops, so we've fulfilled the first rule there. The price has dropped below the open and it's staying below the EMA, so we've got a downtrend. So this is fulfilling so far the criteria for a possible short. We do get a couple of bars going against the trend just before 11 o'clock there, but as you can see, the second of those bars pierces the EMA. So we're now no longer below the EMA, even though it was only temporary. We've broken through that EMA, and therefore we've broken our clear downtrend rule, and so there's no trade to be taken on this chart. Next one was BAC on the NYSE, and this one opens up, goes up a bit, but eventually drops below the opening price, so that's our first rule fulfilled potential trade. We stay below the EMA for quite some time, so that's looking good. And then we get two small up bars, consecutive up bars, so that's two bars going against the trend. So that signals that we've got a possible entry. So we note the price, the low of those two up bars, and the down bar immediately preceding them. So we take those three bars and note the low of those three, and that is at 1273. And we can see there a couple of bars on, price drops below that 1273 point. In fact, it actually gaps a few cents. So we enter on the break of the low, and that happens before 11 o'clock and after 10 o'clock, so that's valid. So we go short at 1270, and we stay short until the EMA breaks. Now obviously, had we got out, if we had a different rule and got out sooner, we would have made more money, but rules is rules, and our exit takes us out at 1250, giving us 20 cents per share profit on that trade. So if we was trading 100 shares, that would be $20 profit, and if we were trading 1,000, that would be $200 profit. So that's our first trade, and that's a profitable trade. Next chart, GENZ on the NASDAQ. This is another one what drops at the open, so that's the first criteria fulfilled. Stays below the EMA, and you can see we've got a couple of bars against the trend, but that's before 10 o'clock, so we're ignoring those. After 10 o'clock we do get a couple of bars going against the trend. Unfortunately it continues going against the trend, and we actually get three, then a fourth and fifth bar going against the trend, and we break through the EMA. So that all signals that this is no longer in a downtrend, so there's no trade to be taken here. This doesn't fulfill the rules. Next one, DRYS, again on the NASDAQ, and again this drops below its opening price, stays below the EMA. And we get a couple of bars just after 10 o'clock what go against the trend, so that signals a potential short trade. Still below the EMA. We take a note of the low from the two bars against the trend and the preceding bar, so that's the middle of those three bars, gives us the low, and the low there is 580. So it takes a little while before get a bit of consolidation there, but we stay below the EMA and we don't get any further two bars against us, so the trade is still valid. And just before 11 o'clock we drop below that 580 level, so we go short at 580, and we stay with this one until just before 1 o'clock, I think it is. Might be a bit before that, but we eventually get a break of the EMA at 555, so that exit gives us a profit of 25 cents a share. So again, trading 100 shares, that would be $25 profit. 1,000 shares, that's $250 profit. And the last one, CME. Now this is a bit exceptional. We get two bars against us. It's a bit difficult to see on this scale, but that second bar, although it looks like a doji, that is actually an up bar. That is a white candle at what's that, about 10:15. So we get the two bars against us. It then breaks below the low, which was at 318, so we go short at 318, and we don't break through that EMA until about 1:30, and that's at 304.93, giving us a whopping great big $13.07 per share profit. So on 1,000 shares, that's $13,070 profit on that one, which is pretty good, has to be said. So the result of all of that is that out of 5 charts, we had 3 that gave us trades and 2 that didn't give us any trades. Total profit before commission, if we were trading 1,000 shares, was $13,520. Now, like I say, that last trade was pretty exceptional, so I'm going to ignore that one and pretend it didn't happen. I want to look at the worst case scenario, so we just ignore that and imagine that we hadn't made that 13 grand trade. But just with the other 2 alone, we made a profit before commission of $450. Commission trading 1,000 shares on those 2 trades would have come out at just $20 using a discount broker. So our net profit for the day was $430. The time taken to make that money was about an hour's pre-market work to go through and find some stocks what are going to move, and I haven't really covered that in this strategy. That's a separate part of the strategy, finding stocks to trade. My standard stock screening method, what I teach in the course, would obviously work well for this, because that's how I had the stocks on my own watch list. So anyway, about an hour's work starting from 8:30 Eastern time before the market opened to find some stocks to watch. The 2 trades that we took, if we're ignoring the last one, the other 2 trades were both done by 1 o'clock in the afternoon, which meant we had a total of 4.5 hours of work, if you can call sitting in front of a screen and watching a few charts work.